What if the fastest money you can get becomes the slowest trap you can escape? What if the small loan that looked harmless at first, the one approved in minutes, the one that promised to help you breathe for just a few days, quietly begins changing the direction of your entire financial future without you even realizing it? Because millions of people today are not drowning because they made one giant mistake. They are drowning because they kept accepting tiny financial shortcuts that slowly turned into long-term pressure, stress, sleepless nights, damaged credit, broken trust, and constant anxiety every time their phone rings. And the truth is, easy loans were never designed to feel dangerous in the beginning. They were designed to feel helpful, fast, comforting, simple, and convenient. And that is exactly why so many intelligent people walk directly into financial traps without noticing the warning signs until the pressure becomes too heavy to ignore. Because when money becomes emotional, people stop calculating risk carefully. They start calculating survival, and that changes everything. And today on Careful Click, we are going deep into the hidden danger of easy loans, the psychology behind instant borrowing, how modern lending systems quietly profit from desperation, why so many people in America and around the world are becoming trapped in cycles of debt they never expected, and how you can protect yourself before one quick financial decision quietly begins controlling your future. So before we continue, take 1 second to subscribe to Careful Click. Give this video a thumbs up, share it with someone who needs financial awareness, and leave a comment telling us if you think easy loans help people more than they hurt them, because this conversation affects millions of families every single day. And the more people understand how these systems work, the safer they become in a world where borrowing money has become easier than ever before. There was a time when borrowing money felt serious. People had to walk into banks, sit down with loan officers, explain their financial situation, fill out paperwork, wait days or weeks for approval, and sometimes even provide references or collateral before receiving a single dollar. And while that process felt slow and frustrating, it also created psychological friction. It forced people to pause, think carefully, calculate risk, and ask themselves important questions before taking on debt. But modern technology changed that entire experience. Now the person can sit alone in their bedroom at midnight, feeling stressed, tired, emotional, overwhelmed by bills, and within 5 minutes they can receive instant approval notifications directly on their phone. No serious conversations, no emotional pause. No time to think deeply, just one tap, one signature, one transfer, and suddenly debt enters their life quietly and effortlessly. And that convenience may feel empowering in the moment, but psychologically, it removes one of the most important protections human beings once had: time to think carefully before making emotional financial decisions. Easy loans do not usually arrive during moments of comfort and stability. They arrive during emotional pressure, during emergencies, during fear, during embarrassment, during survival situations, during moments when someone feels trapped and desperate for relief. Maybe rent is due tomorrow. Maybe the car broke down before work. Maybe a child needs medicine. Maybe food prices increased again. Maybe someone lost their job unexpectedly. Maybe a medical bill arrived without warning, and suddenly the brain shifts into short-term survival mode. And when the human brain enters survival mode, long-term thinking becomes weaker, future consequences feel distant, and immediate relief becomes emotionally powerful. And that is where easy loans become dangerous, because the brain begins focusing on escaping today's pain instead of understanding tomorrow's burden. The modern lending industry understands human psychology extremely well. In fact, many financial systems are built around emotional behavior, not logical behavior. because lenders know something important. Stressed people are easier to convince than financially relaxed people. Emotional urgency increases borrowing decisions, and convenience reduces hesitation. That is why advertisements for easy loans often focus on emotional comfort instead of mathematical reality. They show smiling people, fast approvals, happy families, stress relief, emergency support, freedom, opportunity, quick cash, instant solutions. But rarely do those advertisements spend equal time showing years of repayment pressure, interest accumulation, damaged financial habits, or emotional stress caused by long-term debt cycles, because emotionally attractive borrowing is easier to sell than financially disciplined patience. One of the hidden dangers of easy loans is how small payments create large illusions, because many people do not focus on the total cost of borrowing. They focus only on whether they can survive the monthly payment. And that changes everything, because a person might say $50 per month is manageable, but they never stop to calculate how much money disappears over time through interest, fees, penalties, extensions, and rolling balances. And slowly the loan that looked small begins, quietly expanding into something much heavier than expected. And this becomes even more dangerous when people begin stacking loans on top of other loans, borrowing from one lender to pay another lender, opening new credit to survive old credit, creating financial chains that become harder and harder to break. And the scary part is that debt rarely destroys people suddenly. It usually destroys peace slowly. First comes mental pressure, then sleep problems, then fear, then hiding financial truth from family members, then avoiding phone calls, then anxiety every payday, then emotional exhaustion, then arguments at home, then loss of confidence, because debt is not only mathematical, debt is emotional, psychological, relational, and sometimes even physical when stress begins affecting health. And many people who look financially normal from the outside are secretly carrying enormous pressure internally because they accepted too many financial shortcuts during difficult moments. One of the biggest problems in modern society is that borrowing money has become normalized as a lifestyle instead of being treated as a serious financial responsibility. People are constantly encouraged to finance phones, finance furniture, finance vacations, finance lifestyles, finance appearances, finance luxury, finance convenience. And eventually, many people stop asking an important question: do I truly need this right now? Or am I simply borrowing future peace to satisfy present emotions? Because every loan is not just borrowed money. It is borrowed time, borrowed future income, borrowed freedom, and sometimes borrowed peace of mind. There are people earning good salaries who still feel financially trapped every month, not because they lack income, but because too much of their future income already belongs to lenders before they even receive their paycheck. And this creates an invisible prison many people do not discuss openly, because modern culture often rewards appearance more than stability. People feel pressure to look successful immediately, even when their financial foundation is weak underneath. And easy loans quietly feed that pressure by making expensive lifestyles temporarily accessible before they become permanently stressful. The truth is, lenders are businesses, and businesses survive by making profit. And there is nothing automatically evil about lending money responsibly, because loans can genuinely help people build businesses, buy homes, pursue education, survive emergencies, or create opportunities. But problems begin when borrowing becomes emotionally impulsive instead of strategically planned, because the same financial tool that helps one person build wealth can quietly trap another person in long-term instability depending on how it is used. And this is why financial education matters more than emotional advertising. Many people never learned how interest truly works. They hear percentages but never emotionally understand what those percentages mean over time. And that lack of understanding creates dangerous financial blind spots because compound interest can work in two directions. It can help investments grow, or it can quietly expand debt pressure. And when people ignore how fast balances can grow under high interest rates, they underestimate how difficult repayment may become later, especially when unexpected life events happen. Because life always changes, jobs change, economies change, health changes, prices change, emergencies happen, and financial systems rarely pause simply because someone is struggling emotionally during difficult economic periods. Easy loans often become even more attractive because inflation increases pressure on ordinary people. Wages sometimes fail to keep up with rising costs. Groceries become more expensive. Housing becomes harder to afford. Transportation costs rise. And suddenly borrowing starts looking like survival instead of risk. And this is why economic stress and personal debt often grow together, because financial pressure changes behavior. And when millions of people simultaneously feel financially squeezed, easy borrowing becomes emotionally irresistible for many households trying to stay afloat. Social media has also changed the psychology of borrowing in powerful ways because people now constantly compare their lives to carefully edited versions of other people's success, vacations, cars, lifestyles, homes, businesses, fashion, and financial achievements. And that constant comparison creates emotional pressure to keep up, even when the financial reality underneath is unstable. And some people begin borrowing money not to survive emergencies, but to maintain appearances, protect pride, or avoid feeling left behind socially. And that becomes extremely dangerous because appearance-driven debt often produces the weakest long-term financial outcomes. One hidden danger many people underestimate is how easy loans can slowly reduce financial discipline over time, because when borrowing becomes too convenient, saving sometimes becomes less emotionally urgent, emergency planning becomes weaker, spending habits become looser, and the brain starts treating credit as backup income instead of temporary responsibility. And this psychological shift quietly changes long-term behavior in ways many people do not notice immediately, because convenience can slowly weaken caution when repeated too often. Some of the most financially stable people in the world are not necessarily the people earning the highest incomes. They are often the people who learned how to delay emotional decisions, manage pressure carefully, avoid unnecessary debt, and build patience around money. Because financial strength is not only about income, it is about control, discipline, awareness, emotional stability, and understanding how small decisions repeated over time shape long-term outcomes. And unfortunately, modern loan culture often encourages the opposite: instant action instead of careful reflection. There are also serious dangers when people begin depending on loans emotionally, because some individuals slowly develop a pattern where borrowing money becomes their first reaction to discomfort, stress, or inconvenience. And over time, that creates dependency cycles where people stop solving financial weaknesses at the root and instead continuously patch problems temporarily using new debt. And temporary relief can become addictive because emotionally it feels easier than confronting painful financial realities directly. Sometimes people believe one more loan will finally solve everything, but often it simply delays the deeper financial conversation that needs to happen, because real financial recovery usually requires uncomfortable honesty about spending habits, income limitations, priorities, lifestyle choices, financial planning, and emotional decision-making. And those conversations are difficult, but avoiding them through constant borrowing often creates much larger problems later. This does not mean all debt is bad, because responsible borrowing can absolutely create opportunity when handled carefully and strategically, but there is a major difference between borrowing with a clear long-term plan and borrowing emotionally for temporary relief without understanding the future consequences fully. And that distinction matters more than many people realize. One important thing people rarely discuss is how shame keeps many borrowers trapped silently. Because financial stress often feels deeply personal, people become embarrassed, they hide bills, avoid conversations, isolate themselves emotionally, and pretend everything is fine while pressure keeps growing internally, and silence makes financial problems feel even heavier because isolation increases anxiety, while honest conversations often create pathways toward better solutions. Financial, counseling, budgeting improvements, debt restructuring, or emotional support systems. The modern world moves fast. Advertisements move fast. Apps move fast. Payments move fast. Approvals move fast. But good financial decisions often require slowing down, thinking clearly, calculating carefully, and asking difficult questions before accepting financial obligations. Because one of the most powerful financial habits any person can develop is the ability to pause before reacting emotionally to money pressure. Before accepting any loan, people should ask themselves important questions. Is this solving a real emergency or simply satisfying temporary emotion? Can I realistically repay this without damaging future stability? What is the total cost over time? What happens if my income changes unexpectedly? Am I borrowing because of survival or because of pressure to appear successful? Because those questions create clarity, and clarity protects people from emotional financial decisions that later become painful burdens. And sometimes the strongest financial move is not finding faster money, but building stronger patience, stronger savings habits, stronger financial education, stronger budgeting systems, stronger emergency planning, because financial peace is usually built slowly, not instantly. And the internet often sells speed, while real stability usually grows through consistency and discipline over long periods of time. The hidden danger of easy loans is not only the money itself, it is how quietly they can reshape behavior, emotions, stress levels, relationships, confidence, and long-term financial freedom without people noticing until the pressure becomes overwhelming. And that is why awareness matters, because once people understand how emotional borrowing works, they become harder to manipulate during moments of stress and fear. So if you learned something valuable from this video, subscribe to Careful Click, give this video a thumbs up, share it with someone who needs financial awareness, and leave a comment below telling us whether you think easy loans are helping modern society or quietly making financial problems worse, because these conversations matter more now than ever before in a world where money moves faster, pressure grows heavier, and financial decisions are becoming more emotional every single day. And always remember, before clicking accept on any financial offer, slow down, think carefully, protect your future, protect your peace of mind, and always click Carefulizer.